Good afternoon. My name is Andy Norton. I'm with Sampson Properties, and I'm here today with Karen Daly Esquire, the managing attorney of both the One Loudoun and Middleburg, Virginia offices of Echo Title. And we're here to talk about a very important thing that many consumers don't like paying for, but they don't understand the true level of protection that's there, and that's title insurance. And there are two kinds, as Karen will explain: regular title insurance and enhanced. Karen?
So thank you, Andy. And that's very good points. Title insurance is critical. I have bought properties, and I always get title insurance. And I always highly recommend you get it because it does provide protection. So there are two types of title insurance. You have your basic, your standard title insurance, and then you have enhanced. Basic gives you basic coverage against things like unreleased deeds of trust, perhaps maybe a missing interest wasn't transferred properly in the chain of title, judgment liens not being released, things like that. The enhanced gives you 28 additional protections, and one of those protections is for identity theft. And so what that means is, like you said, there are people who go into the courthouse and they record documents, and they will either try to transfer the property out of someone's name, or they'll try to put a lien against the property without the owner's knowledge or consent. And so how do you protect against that? Well, you have enhanced title insurance because that provides you that specific protection. The commercials that you see are misleading because nobody can prevent someone from going into public records of a courthouse. There isn't anything you can do to stop them. If they come in with a piece of paper, everything looks to be in order, the clerk is going to record that. So what you want to do is say, okay, what will give me that protection? And that is enhanced title insurance.
Okay. Roughly, how much extra is enhanced over regular on a typical transaction?
So it will depend on the price point of the property, because title insurance is always based on your sales price or the assessed value, whichever is higher. Okay. So if you are buying property and your sales price is lower than the assessed value, we're going to use the assessed value because we want to make sure you have full coverage for your property. And so I've seen it vary anywhere from $250 to $500 difference.
Okay. In a recent class that you taught, one of the things that you said that I found shocking was that lately you're finding 2 out of 3 properties have title defects?
1 out of 3, yes.
1 out of 3.
Yes.
Isn't that a little bit on the... I was surprised. I was shocked. I mean, being in the business, is that higher than what you've run into in past years?
That's standard across the board. And the title issue can be anything. It can be unreleased deed of trust, which is our most common issue that we see. So even I tell buyers, you can have a title issue arise out of your purchase if the seller has a mortgage that has to be paid off. Because if when you buy that property, that mortgage is paid off, and ideally what should happen is that particular lender should send in a certificate of satisfaction stating the lien is released. But sometimes they don't do that. And that creates a problem.
And if that prior lender does not send in the certificate of satisfaction, then the homeowner, the new homeowner in their new home, is really living their life thinking that everything is fine with title, when in point of fact, it may not be.
Correct. And you usually don't find it out until either you do a refinance or you go to sell your property.
The moral of the story, definitely, consumers need title insurance. Karen, thank you very much for the explanation. This concludes video 3 of 3 of the trifecta of consumer protection in real estate closings. Thank you.
Thank you.